What's going on, everybody? It's Crypto Interval back with another video. So today I'm going to be talking a little bit about some risk management and uh, kind of how to divide up your portfolio. So yeah, I guess this would be more portfolio allocation. Kind of try to stay organized, um, and also talk about when to like take profits based on where we are in a cycle. But first, I just kind of want to take a look at Hex and Hedron chart quick. Um, so for the past, what is it, couple weeks now, almost a month, Hex has just been sticking around that 3 cent, 3.5 cent level. As you can see, this blue line here is the 20-day moving average. So I think if we're able to get a few consecutive closes above the 20-day and we're able to close above like 3.46 cents, so like 3.5 cents, I think we have a really good shot at coming back up to the 4 cent area. Um, Downside risk, I mean, we could come down and tap 2.7 cents again, but I'm not too worried about that happening. This is a really good spot to accumulate hex if you like hex. I know I'm buying at these levels, and if it does dip back down here, I'd just throw a little bit more money at it. No big deal. Hedron. Hedron's actually looking pretty nice. We've had a good uh, daily candle here. There's still 5 hours left on the candle. If we can close above, I want to say 3.8, we have a really good chance at coming back up and testing this 445 level. Um, Obviously, the liquidations are a little under a month away, so we could start to see a pump going into that. Basically, for that rally, I would expect anywhere from 776 to 100. So basically, at or above, just above the old highs is where I think we could rally to. Obviously, we might go a little bit higher depending on all the hype, but we're still in the bear market, so um, the pump could be kind of mediocre, but a pump it is, and that's what we want to see in the bear market. Our portfolio's increasing. Um, so yeah, Hedron's looking pretty good. If it does kind of roll over and start coming down, we could potentially see uh, 25. Was that 6 zeros and a 2.5 or whatever? Um, I don't think we'll go too much lower than that if we do. Um, but yeah, so let's get into the portfolio. So I made this just for kind of just so you can get an idea. Um, I don't necessarily hold all of these or have these percentages. I just kind of did it um, just to give you an idea of kind of how I like to structure my investments. Now, I don't do this to 100% T. Like sometimes I'll kind of just throw money at whatever I feel like, or if something is down significantly, I'll throw some money at it. Um, but as long as you have like a general idea of where you're going to be putting your money, you'll do all right. So on the left here, I have like your major positions. So depending on your risk level, your two major positions could be like Bitcoin and Ethereum. Um, my major positions are, well, Bitcoin for me is going to be like a fairly small position in my portfolio. Um, but like mainly ETH, Hex, Pulse Chain, Pulse X. Those are going to be like my four major positions essentially. Um, you could do your portfolio however you wish, but I'm just trying to show you how to kind of set up your portfolios. So let's say you got a $10,000 portfolio, um, and you're allocating 15% to Ethereum. So you would essentially be allocating $1,500 just to ETH, and then 1,000, or yeah, 1,000 to Hex, 1,000 to Pulse Chain, 1,000 to Pulse X, and then 500 to Bitcoin. You get the idea. Um, Obviously, you can play around with your percentages. Um, so the biggest thing is you have to identify what your major positions are and what you want to take kind of the most risk on. I I personally don't think that Hex, Pulse Chain, and Pulse X are that high of risk. Um, I think they're going to do very well, so I feel comfortable putting most of my money into these assets. Um, Now, if you're going to structure your portfolio differently if you've got more money, like if you got like 20, 30, 40, $50,000, you're going to probably do it a little bit differently. But let's say you're only coming in with like $2,500. You're probably going to want to focus more on like 3 to 5 assets instead of like 15, just so you can have more of a concentrated uh, portfolio to kind of maximize the gains. Um, but you can do it how you feel you want to take your risk. Personally, that's what I would do if I had a smaller portfolio, is kind of pick a couple things, concentrate my capital. Um, so then we come down to our medium-sized positions. So these are ones that, we got some conviction on, but we don't feel comfortable kind of going all in. So I have like a 35% allocation to that. So these are going to be your smaller positions. Uh, Again, you might not have 5 or 6. You might only have like 1 or 2 smaller positions that you want to take on. Um, so just kind of play it by ear based on how big your portfolio is. Um, and then we have like kind of the gambling positions. This is just kind of like where you throw beer money at it and just kind of hope for the best. Things like Fancy Birds, BNB, Aave, Hedron. Like I could basically put Hedron into a major position. You know, I basically threw beer money at this, like couple 200-300 bucks at it, and now it's like a, kind of a major part of my portfolio. I was one of the guys, the lucky person that was able to like snipe down here. I just sauced like 300 bucks and boom, at 15x. So things like that are potentially what could happen down here. Just throw a couple $100 at some of these things, and they might do a 10, 15, 20x for you, um, which was nice. But you're not going all in on them. So yeah, that's basically kind of how you should try to structure yourself. It's good to make like a sheet like this and just basically come up with a plan. Because if you have a plan, then you're able to focus more on DCAing into all of the projects that you want to get into instead of just like kind of tossing money here or there. You don't really know what your price entry was or how much you bought in with. So as long as you kind of just jot down every month or so what you put in, you're gonna do a lot better when you're trying to make your exits and stuff. I know I every couple months I kind of go through, record all my assets, value them in Bitcoin and ETH and dollars and all that stuff, and then I try to go through and see how much money I actually put in. You're never gonna get it down to the exact dollar or anything, but as long as you have like a rough idea, it's gonna serve you lots of. You're gonna have a lot less hassle when you try to go take profits and figure out where your entries and stuff were. Um, so when you're actually taking profits on some of these things, it's important to know where in the cycle we are. So what I mean by that is like where in the cycle are we when certain things are happening. So this blue line here is approximately where the Bitcoin halving will be in about April or May of 2024. So if you're entering into some of these altcoin positions, 2023, mid 23, 24, you could consider that fairly low risk. Mainly because technically the bull market doesn't kick off until after the halving. So if you're entering into some of these positions like now or mid 23, you're fairly low risk. So if you do that and you're sitting on like a 10x or something like that, you could start taking some of your principal off the table if you wanted to, depending on the project and what's going on with that project. But if you think that the project is going to do a lot more gains, then maybe you could hold off a little bit. If it's like really early in the cycle still, like before 2024, because you don't want to cut yourself too short, but you also want to kind of take something off the table, but that's going to be fully discretionary. I know I'm going to try to leave most of my positions on the table until after the halving. Now, if it's like a 50x or like a 100x or something like that before 2024, then I'd probably take 30% off. Like scrape my principal off and take like 30%. And maybe there's some more opportunities elsewhere. But for the most part, I think what I'm gonna be trying to do is to leave most of my positions intact until about end of 23, beginning of 24, and then kind of evaluate from there. So anything before 2024, you could consider kind of a low risk. But if you're entering positions after the halving in 2024, now you're getting into a little more high risk things. So, if you're sitting on a 5 or 10x, you definitely want to be taking profits on those positions. Fairly significant profits, maybe like 50% of your position. If you're getting into a position like around June, July, October of 2024, and you're sitting on a 10x or 20x by the end of the year, that's probably a good time to start liquidating a little bit, if not most of it, and then you just let those things ride into 2025 and just see where the market's at. But that's kind of how I'm thinking about things, more of on like a time basis rather than an number of X's. Because like you could sell on a 3x fucking every day almost if things are really pumping. and you don't really want to cut yourself too short. So thinking about things more on a where are we in the cycle type of basis, I think could be of a lot benefit to you. Um, that's just personally what I'm thinking because last last time I tried um, getting into crypto, like on a double, you'd be getting excited, and then next thing you know, boom, it's up like another 5, 6x, and you're like, what the heck? So, um, just remember to stay calm. Um, you're gonna make money if you're just patient and don't panic. You might start panicking if things are pumping really hard and you don't know what to do. But, just stick to your guns, continue doing all your research that you need to do, and yeah, you should do pretty well if you just keep a level head and try to take profits whenever you think that um, it's the right time for yourself. Um, or if you see that we're getting near to the end of the middle here or near the end of the bull market, you'd probably want to be more aggressive taking profits. Um, let's just go over some of the take a look at some of the hex derivatives. So Maximus base is trading at 1% of a hex, over 1% of a hex. Decimus is not doing too well. Lucky is actually doing pretty well, 2%. And Maximus is 1.9 hex. Trio is under 1 hex. That's funny because when you go to Trio on here, it says one Trio is worth 1.05. Strange. So yeah, Bitcoin's looking like it's gonna start breaking down again. That's just what I think is gonna happen. Um, if we get rejected by this 20-day, it's probably not looking too good for Bitcoin. Ethereum, same thing. I think we're gonna start breaking down and at least test these lows here again within the next couple weeks for sure. Hmm. All right, guys. Well, that's basically it for this video. I hope this has helped anybody that's kind of was struggling figuring out how to allocate portfolio, or I find it a lot really helpful if you just kind of write down all the things that you want to put money into, and then divvy it up based on what you like the most or what you think is going to perform the best, and just kind of go from there. It's always best to have a plan so that you aren't just all scattered and you don't know where all your money's in, and you don't know when to take profits and stuff like that. So just stay organized, and that should help you quite a bit. But that's it for now. Crypto Winter Bowl out.